some of the largest oil producing nations that control a third of the world's oil supply met. And surprisingly, they called it the Gaza Summit, I believe. And Iran and Saudi Arabia were in the same room, which is a miracle. But they came because they have the same enemy. Anything that comes against the Muslim Brotherhood, they come together, okay? Make no mistake, they're at war. But when two brothers in the same household are at war, and somebody outside of that household comes to attack, those two brothers come together. And although Saudi Arabia, they have their disagreements, they come together as the Arab world, as the Muslim world, trying to protect their brothers in Palestine, okay? They all serve Allah. That's their religious duty. And their God wants them to destroy the infidel, Israel, Americans. So they all have the mutual enemy here, okay? And so the thing, and I watched many of their recordings, and there's a lot. I mean, you have that many world leaders, they all have something in depth to say. It's just too much to keep up with. And I really feel like it hasn't been given the attention that it deserves, especially the weight that they carry and the effect that they have on the price of a barrel of crude. But the Western media either doesn't understand it, doesn't want to report it, or they're trying to protect the assets of the most powerful country in the world. When I say protect, I mean the markets. If the markets crash due to the price of a barrel of crude, it erodes the power that America has, okay? Ultimately, our dollar is powerful because of the markets. Our dollar is powerful because the world believes that America is powerful. We have a powerful military, we have a powerful market, and we have a powerful dollar, and that's why most commodities such as oil is traded in the US dollar. And so they protect it. They protect it by controlling the information that goes out, by controlling the news, okay? And so here's the deal. After reading and watching a lot of content coming out from that Gaza Summit, they all condemn what is happening in Israel. And many of them suggested that they cut oil off. I'm talking about OPEC here, the guys that control a third of the world's oil supply. Many have agreed and suggested that we cut oil off from Israel and all of Israeli allies. That means cut America off from oil. That you don't just come out to the entire world and say, "Hey, this is I'm putting my vote in for this." Many of them want to do this, okay? Now, they're not just ready to cut the hand off that feeds them just yet, because America has a tremendous amount of clout in the world, so they have to be very careful what they do. Iran's ready to just take the head off anybody. They don't care what happens. They're ready to go to war here, all right? And so the other thing is that they truly believe it's time for change in the United Nations. As a conglomerate, they all agree that they need reform in the United Nations. Now, for good reason. The United Nations is anti-oil, which they're being controlled by the Rockefellers, Bill Gates, George Soros, and many others. And the United Nations pushing the entire ESG thing, okay? And so OPEC hates the ESG. And so one thing I see coming from OPEC is they're tired of the West, the markets, ESG, in the news, the media, Western media, infiltrating the oil and gas industry and controlling the markets, regardless of how much OPEC has come together to curb trying to offset demand fears, recession fears, and so on and so forth. And OPEC is pissed about it. Iran is pissed about it. Russia's pissed about it. Saudi Arabia. So they have no other place to go except to allow oil prices to fall where they may, to be desired of the West. And so I strongly believe that it's pushing Saudi Arabia to start making more prudent decisions. And if Saudi Arabia doesn't have to worry about Iran anymore, coming in their backyard and bombing the hell out of them, which it seems like the tensions might be dropping, then it's not going to be near swayed as much from the West. And they're probably more inclined to do something as crazy as what many are suggesting, which is to cut the Israeli allies off from oil, okay, to protect it's a religious duty to protect their brothers, okay? And so I couldn't sleep at night if I had the ability to reduce the death of many of my Christian brothers, period. Well, they're more religious than we are. They're willing to die for their religion because that's what they think is the right thing to do. Allah wants them to do it. I want to read some news here that is really important. The industry, WTI crude, $75 a barrel. Brent crude, $79.86. Oil prices move higher as OPEC and the IEA forecast demand growth. So the IEA and OPEC both agree that demand growth is imminent. I've been saying it for months, and I'm glad to see this, okay? And it's not often that the IEA and OPEC are both in agreement. Biden advisor says sanctions will bring down Iranian oil exports, okay? So this is Biden advisor right here. I like the oil price article better. The United States will tighten sanctions on Iran's oil industry amid the Israel-Hamas conflict, aiming to bring exports down by more than 1 million barrels a day. Well, it's about time. And so we're going to lose 1 million barrels a day from Iran. And not only does that cause upward pressure on the price of a barrel of crude, but also increases the odds of Iran to retaliate. It's going to piss them off to be sanctioned by America. They're already frustrated. And they've already continuously said they're going to up their attacks on Israel, and they're going to use their proxies to do it. And also attack America. They keep chanting death to America. And this is what's crazy to me, but I'm not surprised. I mean, because you got to understand something. So the markets, they are paper and they are physical. The physical barrel of oil coming straight out of the ground. And then there's the paper markets, the guys in suits and ties and air conditioning that don't even know what an oil well is. Those are the guys that control the markets. All they have to do is sell paper barrels of oil, buy and sell, and they grossly affect the markets, okay? And so the market, the paper barrels the guys that manipulate and control the markets, they don't believe that Iran is they don't believe that this Israeli-Hamas war is going to break out into a regional war. They don't think it's going to affect supply. Okay. They don't think this Gaza Summit is going to affect supply. They don't think OPEC is going to do something drastic. They don't think that there's geopolitical risk right now, even though the Middle East there's more potential for Middle East action than there's been in a long time, but the markets are not relying upon that. Okay. And the barrels of oil are priced in recession. They're priced in slow demand growth. They're priced in shale making a huge comeback, which is a joke. Okay, there's a tremendous amount of information saying that shale is on their last leg. It's not going to last, and we're going to see a quick decline in 2024. But we'll see about that. Okay, demand is, and so the markets are priced wrong. All right. Now I'm going to read an article here. It's long, but it's worth it. And it's worth the listen, okay? And this is an article on Rig Zone. Speculative funds have continued to move towards the short side of crude oil markets, analysts at Standard Chartered noted. Money manager shorts across the four main Brent and WTI contracts rose week on week by 31 million barrels to 209 million barrels in the last positioning data, while money managers long fell by 16 million barrels of oil to 456 million barrels, the analyst stated in the report. So in other words, they've shorted oil, okay? The reduction in the crude oil net long over the past 6 weeks has been 258 million. The analysts highlighted in the report, they pointed out that this is the largest 6-week move of money manager funds to short side since early March of 2020. They have priced barrels of crude as if we're in a pandemic again. That is grossly overly sold. Okay. Demand is the highest it's ever been historically, but we are pricing the barrels of crude as if we're going to lose 30 million barrel a day demand, because that was the fear during the COVID lockdown. I mean, oil demand had already dropped when this happened. We're not seeing a drop in demand. We're seeing an increase in demand. And look at this. They're doing these sell-offs the same way they did in March of 2020. The main theme that emerges among money managers as their motivation for such a large move to short side is a fear of future extreme demand weakness, they added. We think the dynamic behind current speculative flows is a reoccurrence of the macro-led concerns about the U.S. and the China economies in particular that temporarily took Brent below $72 per a barrel. So they're just saying, hey, we're worried about China. We're worried about America demand, and China demand, is supposed to come online and hasn't. So they have a fundamental excuse, but it still makes absolutely no sense. However, most of them seem to be confusion about seasonality and the relationship between exports and production, they said in the report. For example, with demand for air conditioning in the Middle East lower now than the Northern Hemisphere, summer is over. Oil use in power generation is lower, which has freed up quantities for export, they added. That increase in export availability is pure seasonality, yet it has been pointed to in some recent analysis incorrectly in our view as of higher supply and a loss of producer discipline, they said. The scale of the current speculative move in oil is not justified by fundamental data, the Standard Chartered analyst stated. Okay. And so what he's noticing is that, well, they're just simply making a mistake. Okay. Because they don't understand that it's seasonality or whatever. And that's an example of many things that could affect it. Okay. But these analysts, they're honest, and they really put their faith that the markets aren't being manipulated. But what the analyst is trying to justify and understand why they are getting it wrong. Okay. But the truth is that the analyst these analyst nerds, they believe in people, and they try to quantify it, but you can't quantify this. You can't quantify a cheat. Okay. So it's impossible. All right. We noted the key role of India's oil demand growth in an earlier report, and the latest monthly data from the Government of India Petroleum and Analyst Cell was strong. They said India's oil demand rose year on year by 211,000 barrels per day in October to 5 million barrels per day. Diesel demand was particularly strong, rising 9.3%. Okay. Our supply and demand model shows global demand rising 2 million barrels per day year on year in October. We forecast demand growth will stay above 1.5 million barrels per day in November, December, and January, with our forecast in 2024 growth at 1.5 million per a day. They continued. Okay. And so everyone agrees that world demand for oil is growing. So where we lose, if we go through a major recession, where we lose in Europe and America, we'll offset it by world oil demand. The analysts outlined in the report that in their view, the latest monthly reports from the main oil balance agencies also lend little support to the speculative-led plunge in prices. Forecasts for 2024 demand growth were little changed. The International Energy Agency forecast increased 50,000 per day to 930,000 barrels per day. The OPEC Secretariat forecast was unchanged at 2.2 million barrels a day per Energy Information Administration forecast increased 81,000. Okay. So they made mistakes and they increased. All three agencies increased their 2023 and 2024 forecasts of absolute oil demand in both years, and all increased their Q4 2024 demand forecasts. They added. Okay. So everybody's increasing their demand forecasts. Okay. The only split came in views of demand Q3 2023, with respective increases of 330,000 barrels per day and 201,000 barrels a day. EIA estimates, but a decrease of 64,000 barrels per day in the OPEC Secretariat estimate, the analyst continued. Okay. Now, this is the key of the entire thing. The Standard Chartered analyst stated in the report that the extreme demand pessimism the oil market showed in May proved to be unfounded and added that the speculative-led undershoot in prices provided the base for a rally that extended to over $25 per barrel before the macro-led gloom descended again. So bottom line, they mispriced the barrel of crude. They shorted it, they mispriced it, they missed it, okay? And so the analyst is an honest guy, and he's like, well, they just missed it. No, they are shorting the market to control the market. They're shorting the market because they don't want it to affect real estate. They don't want it to affect their NASDAQ. Because if oil prices went to $300 a barrel, it would erode the entire stock market. Trillions of dollars would be lost, and the Middle East would become very wealthy and destroying the American economy. And so at the end of the day, paper barrels rule until the market shuts down, meaning you would have to drop a nuclear bomb in New York and shut down America to stop the market manipulations. And then all you would have would be fundamentals, okay, at that point. Fundamentals would rule, all right? That ain't happening. America's strongest country in the world. God bless America, okay? If you look at this chart here, okay? Okay, so where do I think oil prices are heading? Okay, well, if you look at global observable oil inventories onshore and on water, okay, right now we are, you can't see it on the screen here. Okay, here we go. Right now, we're at the lowest level since 2017. Our global oil inventories continue to drop. We haven't, in 2020, our global inventories were much higher, as you can see by the chart here. Now, as you can see by the chart here, okay, so this chart represents global observable oil inventories onshore plus oil on water, okay? As you can see here, we're at the lowest level since 2017. Our global oil inventories continue to decline, all right? That means we are producing at a deficit. That means we are producing less oil, okay, than the demand. If global inventories flatline, we'd be producing as much oil as demand. We are having to reduce our inventories because there is not enough oil, barrels of oil available for purchase, period. And so why isn't the markets reflecting this? Why is the price of a barrel of crude continue to get beat up? Okay. And if you answer that question, then you understand that the markets are manipulated. Okay. And so you have to price a barrel of crude. If, for instance, if you are, let's say you buy and sell futures, let's say you buy crude, let's say you invest in oil stocks, you don't just look at the fundamentals. You're like, okay, well, fundamentally speaking, I think we're going to be here, but what are these major buyers and sellers of paper barrels of oil going to do? Then you have to incorporate that information in there. And then you have to incorporate the fact that these major future contract holders are using artificial intelligence that look at things completely different. They don't just look at fundamentals. They look at everything. They look at the manipulation as well. And then they incorporate that in their and make that a fundamental. The AI doesn't know the difference between paper barrels and physical barrels of oil. So everything to it is just data and information and what it expects. And so the AI moves at a different way, okay? It looks at the entire global markets as a whole, bringing everything into it and then saying, okay, this is the way to cause your entire portfolio, whether you're in real estate, gold, oil, precious metals, crude, NASDAQ, everything. This is how we could get the prices here, and this is how we could get less money out of the Middle East, okay? They have AI that can do that. They have smart analysts that can do that, but they're not going on CNN and say, hey, hey guys, this is what we're trying to do. We're manipulating the markets to shut down the Middle East. We're manipulating the markets to make Joe look better. We're manipulating the markets to push the agenda of the ESG. We're manipulating the markets to cater to the green energy sector and so on and so forth. They would never say that. They would just say, look, we're investing to make money. That's it. That's what we're in it for. No, we're not manipulating oil. Of course, we would never do that. And while Saudi Arabia is angry and nobody's listening to the guy, Saudi Arabia has been crying like, hey, there's not enough oil. The market manipulators are causing oil prices to drop. We just curb production. Oil prices should have been at X, but they're at Y simply because they're being manipulated. So the longer we stay in this situation where oil prices are lower than they should, this environment reduces the amount of global oil supply. And while oil continues to climb, and while the Middle East continues becoming more favorable for a war and geopolitical risk of oil supplies greatly heightens because of everything that's happening, but the markets and the news don't really reverberate that. It's putting us down the road of prices going to levels that are unprecedented. It's going to, if we don't do something about it now. But the ESG of the world is reducing the amount of capital available for oil. I think France just reduced, let's see here, France's new ESG rule could result in 7.6 billion of oil and gas divestments. So you see where ESG is going. You see why the Arab nations are coming against the United Nations. They can't stand ESG. They can't stand the West and manipulations of the markets. And so I believe that this Gaza Summit, what they said in public versus what was said behind the scenes, two different things. I guarantee it. So it'll be interesting to see what they decide to do, because they have done everything they can to prop oil prices up, and to see where they are right now is infuriating to these guys. And I think it might push Iran over the edge, because they're going to be sanctioned. Their price of barrel of crude has dropped, and I believe that Iran is Putin's puppet to help control the price of a barrel of crude, just the same way as the left is, the Western media is. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.